Chris, do you trade options with 0-day expirations on the index? Is it a good idea? If yes or no, why? Oh, my bro. First off, I've had my run with 0 DTE options. I've had my run with them. Did I make money during the time that I traded with them? Yeah. Did I lose money? Oh, yeah. Bigly. Hugely. Reason being, in fact, let's do this. We're gonna get real nerdy real quick. Hope you guys don't mind. I love nerdiness. I'm gonna nerd out hard on options with you guys for a moment. Logging into Tradier. Hang on, just give it just a second here. You know, Monica, I don't just talk shit. Every once in a while, I'll teach some shit too. So, hope that helps. Hope that helps. All right, Tradier's loading up. Here. Let's talk about why I personally don't trade 0 TTE options. You could, and I'm telling you, I have. I know what to do, but I'm saying this is probably not a great idea. So let's go to the SPX. The SPX is the most liquid version of the S&P 500. You could also do it on the NASDAQ, whatever. But if we look at the SPX, first off, lots of numbers here, right? I understand that this can be very complicated. And listen, I remember the very first time I ever saw an option chain. I saw all these numbers right here, and I said, what in the world does all this mean? I have no idea what all these numbers mean. All I want to do is make money. I'll never forget that moment, looking at the computer screen, sitting at my cubicle, working in corporate finance, thinking, I don't know, I don't have any idea what all these numbers mean. I just want to make money. I just want to make money. So let's talk about this. Let's say, for example, that let's say you're bullish on SPX. So let me go to my futures list here. Let's say you're bullish on SPX. It's currently trading around 30 or 53.0850 at this very moment, which should, I guess this is when the market opens. Okay, so the futures is going to be a little bit different than the SPX index, but we'll use it. So if we look at this, and let's say that you're bullish and you want to sell a put spread. So puts are on the right-hand side, calls are on the left-hand side. So let's say you want to sell a put spread and you're like, well, I want to make sure that I don't get into any trouble today. So I'm going to sell a 20 delta put spread, right? And so more than likely, you're just doing it $5 wide. Hang on, this seems to not be, oh, there it goes. This is like frozen on me. Yeah, it's frozen. Great, that's awesome. Great demonstration when it freezes, I know, okay. Let's try that again. Let's say you're selling the 20 delta put spread. Where's the delta over here? That, in theory, gives you an 80% probability of profit, in theory, right? So let me close that. Let's say we sell the 49.30 and we buy the 49.25 to create this put spread. Now, what does this actually look like here? If you go to send to what if inside of Tradier, this is actually really cool. I appreciate this a lot. This shows you the current price is up here. Okay, current price is right here. But price can go down all the way to 29.30-ish, right? It can go all the way down to 29.30-ish, even though it's up at 52.68. And so if it goes down that far, you're going to lose money. But if it stays anywhere where it is right now, or if it goes up, or if it even goes down a little bit, you can profit in this entire window over here, which sounds great. Sounds great. Listen, I was seduced by this for a long time. For many years, I was seduced by the nature of, hey, it can go up, it can go down, or it can go sideways, and I'll still make money. But if it goes down too much, then I'm out. Here's where the issue lies. Here's where the issue lies. We're going to pull up the handy dandy calculator to do this. So in this case, I would earn 65 cents. 65 cents times 100. So every one lot of this spread here, I would take in $65, okay? But the problem here is that because it's a $5 wide spread, so 500 minus 65 means that I have $435 of risk in this trade. So if it works out, and it will, potentially, I shouldn't say would, will, but the theory behind it is that it'll work out 80% of the time. So 80% of the time, in fact, let's do this on a spreadsheet, it'll be a little bit easier. 80% of the time, I'm going to pull out $65. And of course, the price will change here and there, right? So let's say over 5 trades, 1, 2, 3, 4, 4 winners and then 1 loser. So 435, right? Right? Yeah. So the net of this should net to 0. Or oh no. Actually, it's worse. It's much worse than that. So if you have an 80% win rate, so 4 out of 5 trades, 1, 2, 3, 4, 5. 4 out of 5 trades as a winner. 1 trade is a loser. Your expectancy is negative $175. So even with that 80% win rate, you lose 1 of them. Your expectancy is now negative. This is what I didn't grasp. This is what I didn't grasp. And now, not only do I have a negative expectancy in the trade, because 4 out of 5 times I'm going to win, but on the 5th time I'm going to lose, and I'm going to lose $435 versus winning 65 each time, which is a negative expectancy of negative 175. But it gets even worse, because how many trades do I now have to take to make back for the 1 loss here? So equals this divided by negative 65. So I now need 6.6 trades. So I now need 7 trades perfectly executed to make up for 1 loss. To make up for 1 loss. So listen, I've done this and I can speak from experience. Can you make money doing it? Yes. But if you take a loser on it, it's going to take you now 7 trades to make up for the 1 loser. And because of that negative expectancy, it's just never going to work. Long term, people like to talk about, number of trades or whatever. Let's say you do this over 1,000 trades. Over 1,000 trades, you're losing your backside on this, right? In a handful of trades, you may do okay. But to me, the risk to reward is so skewed opposite what you want, it's not even worth looking at. But a lot of people do it. And my itty bitty baby brain can't figure out why that a lot of people make money doing it. And that's why. Backlive, I hope you don't mind me taking a few extra minutes to talk about that, because that was a fantastic question. Thank you so much for that. Shoy, good to see you, Pete. I see an OVTLYR music album coming up. I know, right? JG says, I am sharing this video with everyone. Let's go. Christopher says, he loves the new music. He loves the new music. Jonathan, what's up? Corey, good morning. Mikey, Mike, Yannick, these are getting better and better. It stinks to you guys that they're getting better. I don't have any musical bone in my body. You guys are making these, and I really appreciate that. Paul, good to see you. Keisha, what's up? Joe, bluesy banger from the van, man. Daniel, Dennis, Kleptomaniacs here. Nico, I thought you said good news. Tom, meh. Could be great content. Could be great content. Oh, yeah. How you know I am handsome? LOL. You spying on me, bro? Yes, I've hacked into your webcam. Sean, what's up? Rosie, Martz, Eves, good to see you from Canada. JC, what's up? What is up, JC? So I had a conversation with JC yesterday. JC, first off, JC is incredibly intelligent. He's written, I think he said 19 books, something like that. But one thing that JC pointed out, that we had a big hole, giant hole that I was blinded and I didn't see. And I am so proud of JC and appreciate him so much for pointing this out. He said, Chris, what I need you to do is create something for the very, very beginner, for somebody who's never, ever traded stocks before. How can they go from, I've never traded stocks before, I don't even know how to spell stock. That was his quote, which I appreciate. I don't even know how to spell stock, to successfully trading with OVTLYR. He's like, Chris, tell me what to do step by step. And I was like, dude, I apologize, because I'm so deep into doing this for 16 years at this point that I forgot to take a step back, because there are so many people like what JC's talking about who just need the hand holding, to just need for the bridge to be built, to go from I've never traded before to I know how to trade before, and I know which stocks to pick thanks to OVTLYR. So I really appreciated that, JC, and that's something that that I'm working on. In fact, JC, Basically, he was like, listen, Chris, make it into like beginners, intermediate, and advanced. You've already got the advanced down through golden ticket trading strategy. So you need to work on the beginner and the intermediate. And he's like, then you can take all that, put it into a book. And then instead of telling people to go buy everybody else's book, you can say, go buy this book, which has exactly what you need to get started. And I was like, JC's a genius. Let's pay respects to JC in the chat. Everybody type a J and a C in the chat to pay respects to JC. He was awesome. He was awesome. Nate, what's up? You and Tom should create some fireworks. I know, it could be great. Could be great. Carol, what's up? But Chris, you don't believe in buying the dip or doubling down, unlike Tom, which that is why it could be great content, because we could totally have those conversations. What's up, Mr. Dave? Vin, I skipped leg day. Dude, yesterday was my leg day, and then I went to soccer practice last night, and every time I have leg day and then go to soccer practice, my right calf like just rejects me. And I'm trying to run around, play soccer with all the kids. I'm like, oh my God, I'm dying. So I'm going to have to move the leg days off of Thursday. Alex, Palindry, pre-market green, we'll have to see. Courses, when's 3.0 going live? It's scheduled for next week. I don't have a date for you yet. Mahesh has not slept in 84 hours because of this, but we are working to make sure that this happens next week. Skinny buff guy should get a prize. I think skinny buff guy should get a prize. I think he should. In fact, I think we should do something. I've not done this before. Mahesh has no idea I'm about to spend some of his money on you guys, but let's do it. This will be fun. Okay, so and this is why coming to the live parts is better than just watching the replays. Hang on. So I use StreamYard as a platform to do this, and I just 2 days ago found out that you can do giveaways using StreamYard, and we're about to do that. Let me see if I can figure out how to do that. Yes. Okay. So this is the Friday live hangout. Okay. I need you to type in hashtag outlier. So do this. Do hashtag OVTLYR in the chat. Everyone who types in hashtag outlier will be entered to win a copy of my friend Steve Burns' book, New Trader, Rich Trader. We'll send you a copy of New Trader, Rich Trader. So let's see if this works. Yes. I already have 8 people who have entered, 14 people who have entered. This is cool. This is really cool. Mahesh has no idea I'm about to spend his money. Yush is walking the dog and listening. Yush, take 5 seconds and type in hashtag outlier. Type hashtag outlier. Michaelo, would you use a trading bot? Actually, funny story about that. I am coding. Mahesh is sending me some data, and I'll be coding the whole golden ticket trading strategy into Outlier really soon. So at some point this year, it's on our roadmap where it'll actually show all of my buys and all of my sells on the chart, and you don't have to do anything. How cool is that? How cool is that? Vince is here with the 7. Suleiman, what's up, dude? Dennis, take the best advice from all the investors and make your own plan. Cheers to that. That's what I did. OPP from Trader Tom, what's up? Nuno, Freako, I always wonder what's the best expiration for contracts. I don't know. There's not really, I would say, a best or a worst. What I would say is what works for you. What works for you? Because for me, I like 21 days. I like to give it time to breathe. But some people may go the leap option route where it's 6 months, a year, 18 months, something like that. Whereas some people, they want that, they want to pay as little as they can for those options, which is the only reason I could imagine going so close. But in doing that, you have a lot higher risk of it basically going to nothing, being worthless. Manny has 0% here. Nate, what's up? Did we get the word of the day yesterday? Yes, the word of the day yesterday was Batman. The word of the day yesterday was Batman. Chris, what's in the mug? Southern sweet tea or hot tea? You got like 50 bags in there. Well, I took all the bags out because I knew you would judge me. But I'm still getting over this like congestion thing. But it was like, I think the brand is Yogi, and it was like cold season tea, something like that. I'm getting there, but dude, Lent's almost over. Chris needs his coffee. Chris is waiting for that coffee to start getting back in his cup. Does Outlier have its own charts, or would you combine it with Edge Trader or Spider? Great question. We do have charts, but they can definitely be improved upon a lot. And in the 3.0 update that comes out next week, are the new charts, and the new charts are supposed to be as good as Trend Spider. Mahesh actually let me play around in the dev portal a couple days ago, and I was like a kid in a candy store. I was like, oh, this is cool. Oh, this is exactly what I want. Oh, I love it. So yeah, charts are about to have a monster upgrade along with everything else in Outlier. Nate says, OMG, some random guy on the interwebs doing a demonstration with frozen options chains. Yeah, I know. Mikey Mike says, I have a friend who works at long-term stock exchange. What is that? Another trading platform? I don't know, LTSE. I don't know. They're supposed to make a like a Texas stock exchange, so maybe it's something like that. I don't know for sure though. Sherry, good morning. So yet another negative sum game. Yeah. Kind of broke some people's minds, right? Sounds like gambling to me. Charles, what's up? Vaclav, thank you for answering the details. You are welcome, my friend. You are welcome. Okay, so we're going to give away two things. Skinny Buff Guy, we're going to send you a copy of New Trader, Rich Trader. And then we're about to do this drawing for everybody who put Outlier in the chat. But first, Ray says, Ray, how you doing? I have a question. You're looking at the 10 over the 20 price over the 50. What chart do you use? 1 month, 3 months, 1 week? Sorry if I missed that in previous discussions. It's a great question. So we can look at this on any chart. So we'll go to the SPY. So it's 10 under the 20, price under the 50. So this is a daily candles chart. You can zoom it out and look at it at 1 year. You can zoom it out and look at it at 1 week, whatever. But these are daily candles. And then you can apply the same thing on the weekly charts. So each candle is a week. And you can see here, even on the weekly trend, that's reversing. You can look at it on the month. So every month is a candle right here. And on the monthly trend, it's not quite got that bearish trend set up just yet. Or you could even look at it on the 5-minute chart, right? All of the charts represent different sizes of candles. But what they do show you, no matter what, is the trend for that time period. So it's a great question, Ray. Thanks so much for coming, my friend. Brian, good to see you. Anerd, first time here. And I am glad that you're here, my friend. ESAT. What do you think about RSI and MACD? They're great indicators. They're just not ones I've used. I've used them in the past, but it's not something I use now. I have no opinion on them one way or another. It's just not anything I use. The only things I use now are the 3 moving averages, 10, 20, 50, ATR for position sizing, and then the outlier data right here for the buy and sell signals, as well as the fear and greed heat maps. That's what I use. So great question. All right. So everybody's paying respects to JC. I'm way behind in the chat, by the way. Everybody's paying respects to JC. You guys are awesome because JC really nailed it yesterday. Thank you. That's so fair. I looked through the golden ticket strategy and it was pretty difficult to digest, Daniel. You're right. And JC nailed me on the head for that yesterday. Absolutely. So show you exactly what I need. Title from Stalker Noob to Outlier. I love it. All right, let's move on. See everybody typing an outlier in the chat. There we go. Everybody's typing an outlier. Oh, somebody put a slash. That won't count, Richard. I'll give you 5 more seconds to put it in correctly if you didn't already. But it's got to be a hashtag. JC says, just replace my left knee. Leg day is in a month. Yikes. 2 months out, pushing my nav around the parking lot. Oh, man. Okay. So everybody's putting an outlier in the chat. Be sure you spell it correctly, D. Lindsay. I'll give you 10 more seconds. Skinny Buff Guy, I'm not going to let you win twice, my friend. Too late, I already bought it. That's okay. It's a fantastic book. It is my #1 favorite trading book. As we teleport to the library and I grab New Trader, Rich Trader. So yeah, this is my #1 favorite trading book. And you'll see when you read through it how much it's exactly the way that I trade. All right, let's do this drawing here. I don't know if this is going to work. We're going to try it for fun. We have 95 entries, and we're going to click the draw button in 3, 2, 1. Let's see what happens. Oh, cool. Who gets it? Philip Russell gets it. That's neat. That's super cool. We will 1000% be using this again in the future. Congratulations, Philip. Okay, let me make a note to myself to send Skinny Buff Guy and Philip Russell those books. What I need you to do, please, is send an email into support@outlier.com. No any of you other bozos do it, please. So Philip, writing this down, Russell and Skinny Buff Guy. please send in an email. Let me know your name and address, and I will get those shipped out to you. Isn't that a cool giveaway thing? I love that. That was really neat. Yeah, congratulations to Philip there. Yeah. Any chance OVTLYR will be integrated into a platform so the history of OVTLYR trades will be already calculated? I don't know. I know Mahesh is working diligently to integrate into trading platforms at some point for sure. I just don't know when. Very cool. Well done with your new marketing attempts. Thanks, man. The fix was in. Where's Philip? Where's Philip? I want to say congratulations to him. Emmanuel says, how do you determine how high the stock is on the fear and greed map to avoid a snapback? Does the sector affect? Oh, Emmanuel, that's a great question. So in my trading strategy, I love that question, Emmanuel. So what I found doing back testing, and this is going to change with the 3.0. I'm telling you right now, this is going to change. And that's one of the reasons why I need the data is I probably need 2 to 3 weeks of back testing. Like, I don't know, maybe less than that. But what I had found back testing previously was if it was 0 to 50, now this is, let me rephrase that. I did it when we had it for 0 to 50 on red and 0 to 50 on green. Now it goes from 0 to 100, that scale. But if it's 0 to 50 at all, exit at G63 was a heat map exit point that worked well for me. So what does that mean? So if it's anywhere in the red over here, anywhere from 0 to 50, exiting at 63, which would be approximately here, would have been a decent exit signal, right? So taking that buy signal, exiting a few days later. Then anywhere from 50 to 75, I'm only giving it a 10-point spread, meaning if I got a buy signal here and it was at 70, well, I should do it a little bit differently. Let's say I got a buy signal here and it was at 66, I would only give it 10 points to go from 66 to 76. And then if it was greater than 75, I would only give it a 5-point spread, meaning that if it was 76, I would get out at 81. So the reason being, and we've seen this every time, I can show you this every day, the further it goes in the fear and greed, the more likely it is to snap back. And so I'm trying to keep that leash extra short, So that's a fantastic question. And like I say, with 3.0 coming out next week, I will be deep diving into all the details, and I will give you all the results of my back tests as well. So you know I'm just not blowing smoke up your backside. I have the data to support it. So it's going to be really cool. It'll be really cool. What's your, man, I plan to get to a video today, but this just may be a Q&A session. And in fact, let's just do this today. Let's just make this a Q&A session. How can I help you out? Drop your questions in the chat. This is just going to be a Q&A session today with those friends in the OVTLYR live streams today. So cheers to that. Cheers that everybody's here. James, what's up? What's your explanation of why different time frames have different moving average prices? Okay, so a shorter time frame sometimes is, say, under the 200. But going out to the daily, it'll be over the 200. Okay, I understand your question. So for example, let's do this right here. The 50 period EMA on the SPY is at 56655, and I'll just throw I'll throw a line right here, 56655. So that's measuring 50 daily candles, 50 daily candles. And then if we go into the 5-minute chart and we go up to 56655, that's way up here. Like nothing's even going on up here. It's so far away. But here on the 5-minute chart, it's around 52340. 52340. And if we go back to the daily charts, we can see the 50 period when measured on 50 daily candles is up here, but the 50 period when measured on 55-minute candles is down here. That's why they look different. I hope that helps. Okay, let's do this. I'm excited about just answering y'all's questions today. Why not? What time frame to confirm the change? Okay, but what chart do you determine the time to change or confirm the trend change? So I use dailies, and I use dailies because that's just my style of trading. If you're a day trader, you may be looking at 1-minute charts. If you are a long-term investor, you may be looking at weekly charts. But for me, and honestly, I think the majority of traders, they're looking on the daily charts. And reason being is that I look at the daily charts, I don't want to be day trading. I've tried it in the past. It's not for me. And I do not want to be long-term investing because like right now, right, over the last few weeks, you could have got really hosed if you're a long-term investor and you're like, oh yeah, it'll come back, it'll come back, it'll come back, right? And maybe you look at like monthly candles and you're like, see, it's not that bad. See, it's not that bad. No, you can lose a lot of money if you aren't being market aware. And in my opinion, I think the daily candles are the place to be. But that's just my style of trading. You can do any style of trading that fits for you. Skinny buff guy says, "Yay!" And thanks to Chris and the person who suggested it for sure. Are the new charts also good and fast enough for 10-second candles? No, they will still be daily candles inside of OVTLYR. They'll still be daily candles. Palm Sunday this weekend. Good point. Thank you. No offense to JC, but I knew zero about trading stocks before finding Chris and OVTLYR. I never felt like I was left back at the starting line. Well, Mikey Mike, I'm glad to hear that. Thank you. I'm glad that I could help you with that. Okay, so like I say, drop your questions in the chat. This is just going to be a Q&A session today. Why not? I'm going to even close the window that I had planned on because I want to help you out. And please don't send any super chats. There's no need for you to pay me a red cent. All I want to do is help you out in the best way that I can. And we'll do this for, I don't know, 15, 20 minutes or however long, how many questions y'all have. All right, let's go here. How do you decide position size? And does that apply to any account size? Great question. So position size is so incredibly important. I mean, honestly, position size will save your backside, but it'll also keep you winning enough, right? If you trade too small, nothing matters. If you trade too big, every single tick matters, right? So you want to find that balance of what matters to you, how you feel like I'm making enough progress in my account with my winning trades, and at the same time, I'm not taking too big of a position where I'm getting dominated when I'm wrong, right? And there's the old adage where it's you're always too big on trades that you're losing and too small on trades you're winning. Let's resolve that. So I have a position sizing spreadsheet inside the Discord, and this is exactly the math that I use to come up with my trades. Now, this is automatic, but you can put in your account balance, and let's use 25,000. Let's use that as an example. And let's say you want to risk 2.5% per trade. Okay, well, put 2.5. So when you position size for 25,000 and you only want to risk 2.5% per trade, let's say 25,000 times 0.025 means $625 is the most you're willing to risk in any single trade. Now, this is not position size risk. This is portfolio risk. This is portfolio risk because you can actually trade much bigger than 2.5% and have $625 of risk. Okay. So let's do some examples here. I always like to use Coke and Tesla, a boring stock and an exciting stock. You can have the exact same amount of risk between these two. So the way that you do it is by doing this calculation right here. So you'll take your account balance. In fact, to keep things consistent, let's go use this real quick. So 100,000 and then the risk you're willing to take at 5%. So 100,000 risk you're willing to take is 5%. Okay. And then when you trade options, you can decide to add those. I usually trade the 80 delta option, but you'd fill that in. I'll show you why in a moment. So you take your account balance multiplied by the risk percent, right? So 100,000 times 5% is 5,000. We know that. And then you divide it by 2 times the ATR. ATR value shows you the volatility of a stock. So if we zoom out and we look at this chart right here, down at the bottom, you can see the ATR. This is the average true range. This is the average size of the moves over the last 14 periods. 14 is default. That's what I've always used. The average move over the last 14 periods is nearly $20, $19.85. But you go back a few weeks, it was down all the way as $5.67. So what this says is that the average moves right now are 4 times as big as they were back in October. That's crazy, right? The bigger the volatility, the smaller position size you need to take because that volatility has expanded so much. The movement is so much more. There's a lot more risk on the table now. We can both agree to that. There's a lot more risk in this market now than there was in October, right? These itty bitty baby candles in comparison to these over here, right? We can see that. So we need to position size for volatility. Now, this is also in the Complete Turtle Trader, for those of you who have read it, this should be familiar. This is their calculation, not mine. This is their calculation. So we divide that by 2 times the ATR. So if the ATR was $1.50 or if the ATR is 20, whatever, we'll divide it by 2 times that. And that gets you an approximate number of shares. And then you divide that by the delta that you're looking at on the option contracts. And that gets you roughly 20 option contracts here. So let's use this in real terms here. So if we're looking at Coke or Tesla or Apple, I can't type AAPL, or SoFi or SPY or QQQ or whatever. Doesn't matter. Google Finance is going to pull in all the data for us here in a moment. But maybe not an Apple. I don't know why. Whatever, we'll delete that one. And what you see over here are share sizes, option sizes, and total risk. Now, I know exactly what you're thinking right now, Chris. Hey, you said 100,000, and you said I would risk 5% of my account to get that 100,000. But this shows only 1,250. That's not $5,000. I know it's not. By design, it's meant to be even less than this. By design. Because this is the absolute maximum that I want to risk. If it gaps through your numbers, you're going to be risking a lot more than 1,250, right? And the maximum I want to risk in my account is this. Not the minimum, the maximum. So this is even giving you some extra room in case things go sideways. So looking at this, if we look at Coke, the ATR value on Coke is $2. The ATR value on Tesla is $27. So that means that 27 divided by 2, Tesla is 13 times more volatile than Coke. 13 times more volatile, which in my opinion means you probably need to be trading 13 times smaller on Tesla than you would in Coke. So if we look at this over here and we run the math, this same formula right here, we'll see how many shares we get. So for Coke, the share size would be 1,244 shares. And for Tesla, the share size would be 90 shares. That's pretty crazy, right? A big difference here. Almost 13 times. Now, if we do the math here and we say, okay, if Coke is $70 and I buy 1,244, 70 times 1,244, that's $87,000 worth of stock you're buying, Chris. Wait a minute, Chris, hang on just a cotton pick a minute here. You told me that I'm only risking 5% of my trade at max, but it's an $87,000 position size. Kind of blows your mind, doesn't it? Kind of blows your mind. And so I remember having this conversation with Steve Burns, and I'm like, wait, hold on, Steve. You're telling me that I can trade enormous sizes, but only risk less than 5% of my account? He's like, yeah. You're not going to take it to zero, are you? Are you actually going to hold it to zero? No. Then why would you only position size to go to zero? If you put on 5% of your account and you're willing to risk 5%, that means that your position size at 5%, you expect it to go to zero. Do you see that right there, right? We're not expecting Coke to go to zero. And if it starts to go down, we're going to get out right away. In fact, I had this conversation with my dad one day. What's up, Dad? I know you're listening. We're driving down the road, Highway 75, between Melissa and McKinney, heading south. And we had this conversation. And I was telling you about my position sizing. And I remember specifically you saying, oh, so if it goes to zero, then you just lose everything. I was like, no. I would definitely get out well before it going to zero. And so that's not a criticism towards my dad, but that's how a lot of people think, is it's either all or nothing. It's Lambos or food stamps. You don't have to do that, right? So you could have an $87,000 position size. Crazy. But let's continue on with the math. But if you're buying options at the 80 delta, that's taking 1,244 and dividing it by 80. And that says, hey, 15 options in Coke. So let's go to Coke real quick and see what that looks like. Oh, Monica, I know you wanted me to talk shit about somebody today. I'm sorry. Forgive me. I should be talking shit about somebody. My bad. I'll do it next time, though. Be sure you subscribe and like the video. Okay, so if I'm looking at an 80 delta call in Coke, that puts me right around here. market's going to open in just a minute. Once it does, this should tighten up. But let's say that our price right here is 306. Let's say that our price is 306. 306 times 15. 3.06 times, well, I should do $300. So 306 times 15 means that my option position is only $4,500. Now wait, Chris, you just said it was $87,000. It's controlling $87,000 worth of stock for $4,500. If I have not blown your brain already, type a B in the chat. If I have blown your brain, type a 7 in the chat. If I've blown your brain, type a 7 in the chat. If you understand what we're talking about, type a B in the chat. That'll help me. So we can have a size that's $87,000, but if we do it in options, the size is only $4,500. And that's how you can get crazy returns. It's because if I'm just buying the stock, I'm really limiting myself to maybe 1 or 2 trades total with this position sizing. But if I use the options, now I can still put on 8 more trades, maybe 10 more trades. Cool. Isn't that crazy? Yeah. So this is the being able to talk this stuff. That's how you know I know my shit. It makes sense and it blew my mind. I know, right? A B and a 7. Got some B's, got some 7s. Very cool. I'm glad to help out with this. Max says, so the risks are the same holding either options or positions. They can be if you know what you're doing. So let's break that down. They can be. So when you go into deep in the money calls, now the market's open, so this should be a little bit easier. When you go deep in the money calls, they work differently than out of the money calls. Let me show you what I mean by that. Theta curve. Okay. They act very differently. Let's make this bigger. Open image in new tab. There. Okay. So I didn't learn this on my own. Larry Hite taught this to me. Larry Hite was the first billion-dollar hedge fund manager, one of the original market wizards, and one of my mentors. So an in-the-money option has a little bit of extrinsic value, and it will decay. All extrinsic value on all stocks will go to 0 on every time, no matter what, by expiration. At the money or out of the money options decay like this, versus in the money decays very slowly and smally. I don't know if that's a word that Trump would say, but it sounds like a word that Trump would say. It would decay smally. Yes. So what does that mean? What does that look like in practice? Let's see. Let's go to a stock with a bit more extrinsic value like Tesla. Okay, so for this option right here, the 265. The 265 has $8.75 of extrinsic value. Now, of course, this is going to move because the market's open. But let's just say it's got over $8 of extrinsic value. Extrinsic value goes to 0 on every option, every time, no matter what, period. But because it's out of the money, all of this, every bit that you pay for it will expire to nothing. Every red cent, every United States American penny with Abraham Lincoln printed on it will expire to nothing. Your value of your option is worthless. You get nothing, sir, as Willy Wonka would say. However, an in-the-money option, and we'll go to 190 as an example here. This has just a few cents of extrinsic value. And so all of this, except for just the tiny bit, like just the cream on the top, right? Just the cherry on top of your banana split, all of it is moneyness. How deep in the money it goes shows how worth it is. How far out of the money it goes is how worthless it is. How valuable it is versus how worthless it is. And that's the difference between an in-the-money option, which is full of moneyness, which is full of the intrinsic value that doesn't decay, versus an out-of-the-money option that is 100% decayable. Okay. So when you treat them versus an in the money call versus an out of the money call, an in the money call is a leveraged investment. An out of the money call is a lottery ticket. So that's the big takeaway here. In the money calls are leveraged investments. Out of the money calls are lottery tickets. JC says he's learning more through these live streams than anywhere else. This is such a no-brainer. So easy that it seems wrong. Glad it's not. Dude, I am so glad. And JC, the way that you can pay me back is just by telling somebody else. If you can tell somebody else about these. In fact, why don't we make Fridays our Q&A days? Why don't we make Fridays our Ask Me Anything days? Because I think I can really help you guys out even more rather than talking shit about people like Monica was saying, that I can help you out. I can help you out as much as I can. So continue to please drop your questions in the chat. Philip Russell, our big winner of the day. I've been subscribed for 2 months now. I literally jumped out of the bed to wake my girlfriend up. Dude, way to go. Way to go. Aw, Native Ginger says this might be my favorite YouTuber video ever. Sammy says, y'all should be more worried about bond yields in the stock market right now. Bro, I couldn't even tell you what the bond yields are right now. Who cares? Only price pays. Damn it, where's my megaphone? AMA Fridays. I love that. Friday equals Q&A. Excellent idea on Fridays. Yeah, cool. I love this. Can you do a formal class training on options? Okay. Sure, we can do that. I'll have to plan it out though. Okay. Let's continue on with the questions here. Let me continue to scroll. Is there a way to have trades pre-staged so you can react quicker? Like build them and save them in a trading platform? Yes, I think there is. So this is a trick that I do. I don't know if other people do this, but this is a trick that I actually do. So I'll teach y'all something. Most of the time when I am trading and I see something I need to do and I need to do it before the end of the day, I'll show you a trick that I do. So let's say that I want to buy Tesla. Let's say I want to buy the Tesla 220s. Let's say I want to buy the Tesla 220s. What I'll do, I literally do this, by the way. This is a real thing I do, is I'll go in and I'll set my quantity. I'll make sure everything's good. And then I'll set my limit price to be a penny. Now, because this is a limit order, there's 0% chance it's going to get filled, right? It has to be this price or better to get filled. If I put $50, then yeah, it's going to get filled. And it's going to get filled somewhere between $37.90 and $38.50 right now. It's going to get filled right away. But if I put a penny and then I even hit send, it can actually be a sitting open order that'll just sit there in your open orders waiting to get filled. It's never going to get filled. But then when you're ready, you can then go in and adjust the limit price to the limit price you want to pay, or the limit price that's approximately market price right now. Boom, you're in. That's a little pro tip I've actually never shared before. I do that. I do that with my itty bitty baby hands. So that was a great question. Yeah, that's a pro tip I've literally never shared before. Let me see. I do not know if Trader has that. That would be cool. I wouldn't mind a couple extra bucks while it's just not doing anything. Let me keep on scrolling here. Hey, Graham says this is the most useful hangout I've attended, and it's going to be a thing on Fridays from now on. Very cool. Random guy's head was blown with the position sizing. For the stop out, if it crosses the half ATR or the 10 EMA, you're out. Is that equivalent to a 5% trailing stop? Usually it's a lot less. So in fact, let's do the math. So let's just say that we're getting long Coke. Let's say that we get in at 70.83. All right. If it crosses half an ATR or the 10 EMA, you're out. So let's put in our half ATR value. So we do that. Let's do math. Half ATR, current ATR is 1.71. So if we go 1.71 divided by 2 is 85 cents. 85 cents down from 70.83 is 69.98. So that would be my half ATR point. 69.88 or 98? 98. Cool. Now, here's the thing. And this is why I like to always say you're going for the least amount of risk. If anything on this happens, if any one of these things happens, that's the exit signal. So for example, the 10 EMA being broken. The 10 EMA is actually up higher than the half ATR. You see the half ATR is down here at 69.98, where the 10 EMA is up here at 70.27. Right, so if it closes under here, let me throw a red light on there. If it closes under the 10 EMA, it would still be above the half ATR, but because the 10 EMA is less risk, that would be my exit signal. Fantastic question. Fantastic question. Good morning, Chris's dad. Kev says, okay, now I get it. Very cool. Are all the trading rules available if you subscribe to OVTLYR? Yeah. Oh yeah, of course. In our Discord, we have, it's called the VIP Investors Toolkit, and we've got so many resources in there. Probably an overwhelming amount of resources. Chris, so you trade options? Yes, I love options. I don't really ever trade stock ever anymore. I thought you just went big with shares until you get a signal from options or a signal from OVTLYR. No, my trades are options, and I get the signal on the stock, and then I'll buy the option. How do I set a stop loss on a put option? So I don't set stop losses, and the reason being, we kind of saw that earlier. The reason being is, let's go back to Coke. Let's see if it's still there. I don't know if anyone else noticed it, but the spread between them got really wide this morning right before the market opens. And let's say, for example, you're looking at the 67 calls, or even the, you asked about puts. I'll talk about puts. Let's look at the 77 puts right here. In the pre-market, I don't know how wide this was, but guaranteed for sure it was not 20 cents wide. Now, I have been in situations where my stop loss on the option, because you have to put in the option price to get filled, right? My stop loss was hit. Let's say if my stop was, I don't know, 550, and this was super wide, it could have got hit after hours and got filled and got closed, and nothing happened other than the option price doing what it does every day, which is just expanding after hours. And I was livid. I was like, why did you close my trade? Well, the option prices, that's why. I'm like, but nothing happened. Doesn't matter. The option price has changed. Give me a break. Now, some brokers allow you, and I don't know if Tradier does. I haven't even looked to see if Tradier does. Some brokers will allow you to say, okay, if it hits, 68.98, automatically close my trade. I also don't do that. I don't do any stop losses in the market. And the reason being is candles will wick all over the place. I'm really only concerned about the closing price. So I'm only looking to trade at the end of the day, really the last 30-ish minutes of the day. If it looks like it's going to close under my stop loss, I'm out and I don't have to stress on it. That's just my signal. I need to go. But if it looks like it's going to stay about 30 minutes before the end of the day, then I keep it. And sometimes the next day, sometimes within the last few minutes of the day, it might close under, and that sucks, and that's part of the game. But I also have rules for that too. I have rules for that too. So let's do an example. Let's say that my stop loss, I set at 70.83. Okay, so this right here. And then by the end of the day, it did exactly this, where it came back down, actually closed under my stop loss. Ooh, Chris, that sucks. What are you going to do? I've been through this before. I played this game a couple times. If price moves past the planned exit point at the close, set an alert to close the trade if it drops below the prior day's low intraday. So, for example, if it drops below the prior day's low, which would be way down here, then I would definitely get out. Which I would not be happy if that were to happen. But that's how I would handle it. That's how I would handle it. But I don't put any stop losses in the market. Rob says, thank you, Chris, for the pro tip on setting low limit order before you're ready to finalize. I'm guessing that works for long orders too. Oh yeah, dude, for sure. Like, you're never going to get filled at that price. So if you just put it in for a penny, it'll just sit there until you're ready, and then you can go adjust the price. Yeah. Driz says, you just answered. Awesome. What do you think about shorting the SVIX? I personally don't do any VIX trades, but it could be something you do. CMAC, good question. Over on the OVTLYR charts. How many days is considered a heat map stall? So what I'm looking for what I'm looking for is when I buy a stock for it to continue to be losing fear, moving towards greed. At some point, it will stall, meaning it will be the same value 2 days in a row. So for example, if we look at this, so follow these numbers that are going to pop up over here. Going from 21, 24, 29, 33, 35, 41, 44.83. The next day, it comes back down 42.75. That's it. That day is an exit signal for me. If it stalls or reverses, that is the exit signal for me. And you can see it actually came about a day before the sell signal came. So could have wrote it up, got out a day before the sell signal or so, and then it went down after that. Great questions. I love this. This is great. Mikey Mike says, if you can, you have to come to all of Chris's live streams because you never know when he's going to bust out the big learning guns and show us some real golden nuggets. Well, we're definitely going to put this on a Friday thing. Chinny, great question. What do you set your stop loss at? So we talked a lot about ATR earlier today. I set my stop loss at half an ATR, half of an ATR. Now, my trailing stop will be the 10 EMA because look at the 10 EMA. In an uptrend, it will move up with you, okay? But a stop loss should be set in stone. It shouldn't be moved. And if you do move it, you are only allowed to move it in one direction, and that's up. I remember specifically having that conversation with Larry Hite. He says, I mean, like, he literally drilled in me. It was almost 2 straight hours of learn to take a loss, learn to take a loss, learn to take a loss. And one thing that he told me was your stop loss can only go up. You are never allowed to move it back down. So I have one stop out exit point, and that's the half ATR. But the trailing stop should continue on with it. But like I say, I'm always looking for the least amount of risk. So if one's hit before the other, I still need to take the least amount of risk. CMAX says, thank you. No, thank you. Thank you for watching. Thank you for telling other people about this. Golden Oldie asks, have you ever been caught out badly by not setting automatic stop loss? Yeah, and that's part of the game, right? There will be times where things drop unexpectedly. There will be times where it gaps through where you'd want to get out. And that's exactly why position sizing will save your backside. Position sizing will save your backside at the end of the day because you can't control moves like that. If you're in a nice uptrend, you should have some warning signals before something like that happens. Let me show you what I mean by warning signals. You have seen me talk about red lights and green lights. Let's look at all of the meme stocks. Let's look at all the meme stocks lately. I call any of these stocks where people like lose their shit over them meme stocks, like Palantir. People loved Palantir. They were like, oh my God, Palantir's going to go to the moon. And it did. But then you had a warning sign right here. You had this warning. Would I have gotten out there? Possibly. I really might have. But then what happened the next couple days? Gets monkey hammered some more. And then it gets monkey hammered even more and even more. Let's look at SoFi. Right? It had this big move up, giant move up. But it told you ahead of time something wasn't right. Something's not right. Closing under the 10 EMA. Close under the 10 EMA means your trend is broken at this point. Your trend has bent. Look at this. When did it close under the 10 EMA? That got pretty close, but I don't know if it did. When did it close under the 10 EMA? Right as it nearly peaked. It went up a little bit, down a little bit, up a little bit, and then down a lot of it. So it warned you ahead of time that something wasn't right. Let's look at NVIDIA. Right? NVIDIA. I mean, let's go more on this side. These are the trends that you want over here. And then it had one warning sign right there. Actually, that would have been a perfect red light because it closed right under the 10 EMA. Goes right under there. And then after that, sideways for months. Isn't this cool? Right? Isn't this cool? Now, why the 10 EMA? So the 10 EMA is the indicator of the short-term trend. If the short-term trend is going up, if prices are above what they were for the past 10 days, that means prices are moving up, right? It's like I saw an article this morning that said egg prices have hit record highs. So you're telling me that 10 days ago, the price of eggs was $3 a dozen. And then today it's at $4 a dozen. Well, the average price over the last 10 days was rising from $3 to $4. And you can see today that it's above what the average price was for the last 10 days, which means prices are going up, right? We can see that in eggs, we can see that in stocks, and thankfully in stocks we at least get to see that on a chart. Makes it a lot easier, right? Makes it a lot easier. And you can even see when it goes the opposite direction. Now, does it mean a close under the 10 EMA is going to crash? No, for sure not. But it does show you that the momentum has started to change. The winds have started to change. And most importantly of all, it gets you out of the way before something crashes. You cannot, because this is math, you cannot have a crash without it going through the 10 EMA. You cannot. It will forever, because it's math, be below the 10 EMA as the stock is crashing. So Meta is a great example. Look, how many times did it close under the 10 EMA? 0. And then right here. And then that was your warning light. That was your red light. Immediately, it crashed down. And like I say, it doesn't always have to crash back down, but this tells you. It's such a warning light. You've got to be able to understand that. What time of the day do the buy and sell signals update? So I believe it runs at 10:30 p.m. West Coast time. I know it updates overnight on West Coast time zones. So I believe it's 10:30 p.m. the night before. So at 10:31 p.m. last night, you could have seen the buy and signals for today. Buy and sell signals for today. Salty Brad says, this show's amazing. Thanks for all the quality questions. Yeah, I can't do this without you. You are what make this worthwhile. Okay, no stop loss orders. He gets it. But don't use trailing stops on winning orders. Oh, yeah, for sure. You must. You must use trailing stops. So if my 10 EMA is my trailing stop, that's going to help get me out. And this, you know what, Robert, thank you for bringing this up. Let's say that I got in down here. Let's say I got in on this candle, just for example. That would have been a green light, by the way. 10, 20, 50 across back over the 10 EMA would have been a green light. If I wait and don't move up my exit point and just keep the half ATR, then I miss all of the gains. And then I only get out right here. I round trip it the whole way. So you have to move up your exit point with a trailing stop, but that's different from your stop loss. Stop loss meaning, you know what, the trade didn't work out, I'm going to lose money on the trade. It's okay. Trailing stop meaning I'm going to get out once it breaks the opposite direction. So two different things, different uses for them, but one fantastic question. One fantastic question. All right, let's see any other questions here. Ryan says, a stock can't crash without first breaking below the 10 EMA. It's just math. It's just math. Like, it's the price over the last 10 days. If it's below the price over the last 10 days, it's going down. It may not crash right away, but it must go through the 10 EMA to crash. Mikey Mike says, will with 3.0 have the same features as TrendSpider chart you're looking at? So initially, it's going to have a lot of really new things. Mahesh has forbid me from showing you the dev platform, so I will not be showing you that. But I will tell you, when I got to play with it the other day, we can draw lines on it, which is cool. Right now we can't do much with the charts. Like literally, you can add moving averages, but that's about it. But on the new charts, you can add moving averages. You can change the moving averages colors. You can draw right on the chart just like this. You can change the line colors. One thing that Mahesh was really excited about was this feature where you can calculate the move with the percentage and everything. That is there. You can add notes right onto the charts. So yeah, it's going to be awesome. There will be a couple things here and there that I might need to go into TrendSpider for, but overall, 90% of what I do will be inside of OVTLYR, and ATR will be available right away. OVTLYR blocks will be available right away, and then more indicators will be added as we code them in. So yeah, it's pretty cool. It's pretty cool. Let's see. Driz has a great point. Be aware of holding through earnings. Yes, be aware of holding through earnings. That is one thing I will avoid. I did have an earnings trade last year, not on purpose. It was in Bank of America, and the trading gods blessed me on that one. It popped open 5% the next day. I didn't even realize it had earnings that night, And I mean, thankfully I made money on it, but that would have been one that there was 0% chance I would hold through. It just worked out well for me. Earnings are such a gamble. Earnings are such a gamble. Okay. Slugged easy. Thank you for this example. Let's go look at it. JYD. Ooh, you know what? That's a great point. All right. It got monkey hammered without touching the 10 EMA. So to this point, it did get absolutely dominated here. It got monkey hammered. We hadn't used this in a while. It got monkey hammered. It got monkey hammered real hard. But notice that it did go through the 10 EMA, right? It is below this now. This is actually a perfect example. It has to go through the 10 EMA to crash. Even though it was moving up here, it did go through the 10 EMA. Clearly some sort of catalyst happened for this. And this is what I'm talking about here. There are times where you can't control this move. And that's why position sizing is so critical. Because if you had your full port into here and it goes from $8 to 35 cents overnight, bro, you're toast. Your whole life savings is gone, basically. Which is why portfolio sizing is so important. And it is very rare. Native Ginger asks, Chris, could you explain to me options and dividends? I remember seeing something about that in an older video. Okay. So one thing that I've had to deal with in my past is, I believe it was selling. It's been so long. I can't remember exactly, but I believe if you sell calls through the ex-dividend date, you can be assigned those calls. And this is what really blows. Now, I'm trying to remember exactly. So if I'm incorrect, please forgive me. But I remember going through this. If you sell calls and they don't have enough extrinsic value, then you can be assigned on those calls. And when you are assigned on those calls, was it calls? Yeah, you're selling calls, so you'd be short shares. So you owe, because it's not buying calls, it's selling the calls. You actually owe the person. This is so messed up. If you sell calls, which is a bearish trade, if you sell calls and then you get assigned the short shares, this is a very rare circumstance, so don't worry too much about it. If you get assigned those shares, not only do you take ownership of these short shares, but you also now owe the dividend out of your account to the person who was assigned those shares. How messed up is that? How effed up is that? I was so pissed when I found that out because it happened to me, and then I had to pay the dividend out of my account. I was like, F this noise. I just want to put on a trade, make a couple bucks. Why do I have to deal with this? Yet another reason why I have just really focused on long calls and long puts at this point in my life. It just overcomplicates things. So yeah, it's a rare thing to happen, but it does happen. And I've been on the receiving end of that. It sucks. Is there a list of red light, green lights? So of course, in OVTLYR, we give all these buy and sell signals. In fact, you could go over the watch list and see today we have 38 new buy signals versus 4 new sell signals today. In fact, I did notice this earlier. Market breadth may have bottomed. In fact, the video I'm going to make for Sunday coming out, I actually have a thesis. I have a thesis that we may have hit a market bottom. It sounds crazy, but I think we may have hit a short-term bottom here. I think we may have. So be sure to watch the Sunday video to hear my full thesis. I'm not going to give it away now. Yeah, Native Ginger is like, that scared the crap out of me. Yeah, it sucks. I never want to deal with that again. That sucks so hard. But as far as red light, green light, let's just do a quick lesson on that. Quick lesson. So red light, green light is a concept that I've tried to simplify it in a way that makes as much sense as possible. So first off, you need to combine this with 2 things together. First thing you need to learn is the OVTLYR trend template. So the OVTLYR trend template is the 10 over the 20 with price over the 50. And that's just mathematically a trend. When price breaks under any of these points, the trend is changing. The trend has reversed, right? Now, of course, there are times where it might whipsaw and you might make a buck or lose a buck. But when you are on the right side of the trend, you can be in that trend for as long as the trend goes, okay? And sometimes they're baby trends like this, and sometimes they're big boy trends like this. Now, red light, green light means you take that one step further. You have the 10 over 20, price over the 50, but you can wait for when price goes under, and then you have a first close over the 10. So this isn't quite crossed over yet. Not yet, not yet, not yet. Maybe, for sure. This would be green light right here because your 10 and 20 crossed, price is over the 50, and it wasn't on any of these candles until that point right there. And then this particular big boy trend happened and it rocket shipped higher. And then you could get out on a close under the 10 EMA right here. And in that one big boy trend, 10% gains, 10% gains in Apple. Pretty cool, right? And you got out before Apple had this big old down move. Now, if we look at it a different way, right? Where's sometimes where it didn't quite work out as well? Right, you got your green light right here. 10, 20, 50 crossover on this red candle. When did it close under? Right here. Right. So on this one, we would have lost 82 basis points. You could wait again. Maybe, but I would be more confident on this candle right here. You could get in right there at the end of the day, and then get out at the end of the day, goes under the 10, and you would have made 53 basis points. And this is what I'm talking about. Sometimes you make a buck, sometimes you lose a buck, right? And let's say you get in here, and you get out here, and you've lost 1.41%. But then the next time you made it all up and more here, 10.35%. And this is what's important about understanding trend trading, is that not every time is it going to be a giant move. So we look at negative 0.82872 plus 0.531 minus 0.414. Oh, dang it. I messed that up, didn't I? Let me start over. So it's negative 0.872 plus 0.531 minus 1.414 plus 10.375, 8.62. So you've made 8.62% amongst this. Now, here's the deal. We don't have the Nancy Pelosi plan just yet. Not yet. And so we don't know, right? We don't know on any one of these candles what the next candle is going to look like. We have no idea. That's the surprise. That's the fun of the game, right? And so we just have to look at what we have today. In fact, one of my mentors, Minervini, has, where is this quote? We got a few new quotes from him, by the way. Those who ask me where the market will be in a year or what level the S&P will bottom totally misunderstand what it takes to be great. I'm in the business of responding, not prediction. Telling the future is impossible and unnecessary. Trading is a now business. And this is an example of that, right? We can't see the future. We don't have to predict the future, but it is a now business. You got a green light right there. I don't know how this is going to turn out, so we'll do it together, right? You got a green light right there. Every day goes past, and then red light right there. Now, how did we do? A scratch. We made 47 basis points. So that's the thing with trading, is that you don't know how big you're going to win, but you should know exactly, because you've set your stop loss, how much you're willing to lose. Now, I want you to win, and I want you to go over to OVTLYRdeal.com, and I'm going to give you today's secret word. I know you've all been patiently waiting for this. I want you to go over to OVTLYRdeal.com right now for today's secret code. I don't remember what it is. I have to go look it up. Hang on. I got to look it up. 20 seconds here. Oh, here we go. Today's secret code, contest. Today's secret code, the final code, is contest. So if you want to win a full year of OVTLYR and $1,000 for free, all you have to do is go to OVTLYRdeal.com, put in a little bit of information for you. And of course, we ask that you share a couple things out there on the internets for us. And then you can win $1,000 and a full year of OVTLYR. And if you've already paid for a year of OVTLYR, we'll just tack it onto the back of it. Don't stress. There's no stress there. First runner-up gets $200 worth of merch and my 5 favorite trading book bundle. Second runner-up gets $150 worth of merch and my 5 favorite trading book bundle. So again, the secret code of the day is contest, and you would put that up here on April 11th secret code. So listen, I really like this. I want this to be our Friday thing. So be sure you start gathering questions and bring them on Friday mornings, and we can answer these questions together. This will be a ton of fun. And listen, thank you so much for coming to this, where we'll help you save time, make money, and start winning with less risk. And I'll see you for this afternoon's live stream. Have a fantastic day, and we'll talk soon.